ITC stock is currently trading around 350, very close to its 52-week low. Whenever a large, stable company like ITC comes near long-term support zones, investors naturally ask one question: is this a value opportunity or a value trap? Let's break this down logically. First, a quick look at the business. ITC is one of India's most diversified consumer companies. Its business spans cigarettes, FMCG foods, personal care, agribusiness, and paperboards and packaging. The cigarette business remains the core cash generator, funding expansion into FMCG and other segments. This cash flow strength is what has allowed ITC to maintain a strong balance sheet and consistent dividends over decades. Now, let's talk about why the stock is weak. ITC is currently facing negative sentiment, and a big part of that is regulatory uncertainty. The market is worried about growth visibility, not survival. Quick 10-second highlight on tax. Recently, the government increased cigarette taxes, which impacts volumes and near-term earnings. This is an overhang on sentiment, and one key reason the stock is under pressure. That's it. Important, but not the full story. Now, moving beyond the headline risk. Despite these challenges, ITC continues to generate strong operating cash flows. Its cigarette margins remain among the highest in the consumer sector, and price increases over time have historically helped absorb tax shocks. Meanwhile, ITC's FMCG business is steadily improving. Foods and staples brands continue to gain market share, distribution reach is expanding, FMCG margins are slowly improving, the business mix is becoming more balanced over time. This transition is slow, but it adds long-term stability. Let's look at valuation. At around 350, ITC trades near 13-15 times earnings, which is low compared to its own history, other large FMCG peers. Add to this strong balance sheet, predictable cash flows, healthy dividend payouts. This valuation provides a margin of safety, especially for long-term investors. From a market perspective, ITC is currently in a base building phase. The stock is not showing momentum, and that's important to respect. Trying to buy for a quick bounce here is risky. This is not a short-term trading stock. So what's the right approach? For short-term traders, stay away. The stock lacks momentum. For long-term investors, gradual accumulation near current levels makes sense if your goal is stability, dividend income, lower volatility, long-term compounding. ITC rewards patience, not speed. Let's conclude. ITC's current weakness is driven by sentiment, regulation worries, and tax concerns, not by a breakdown in business fundamentals. The company remains cash-rich, diversified, operationally stable. At 350, ITC is not exciting, but value investing is rarely exciting at the time of buying. This is a stock for investors who are willing to wait. If you found this analysis useful, like the video, subscribe, and follow for more calm, data-driven stock breakdowns.